as a trader, our role is to stay alive as long as possible. And the only way to stay alive is by having a proper risk management. Because for me, my risk to reward ratio is limiting my losses. So in today's video, I'm going to give you a proper risk management that is built of 3 major things. Remember, the last one is the most important. So make sure to stick to the video up to the end. So on our list, we are going to start with what we call age. Age, those are the signals that helps you to enter in the market. Without age, trading is pure gambling. The only thing that makes trading a real business is by having age. Age helps us to win more than we lose. That is only what separates gamblers from we traders who are doing trading as a business. That is the only thing that separates us. And your age, you must backtest your age and you know its winning rate. Are you seeing? Those things, they go hand in hand. You can't go on risk management when you have a poor age. So, and it is not all about the age. You must be having a well-refined age like mine. So for me, I use support and resistance. I use support and resistance, but it is not all about support and resistance because I mix it with price action and liquidity peak. Liquidity peak helps me to get the real signals that helps me to enter in the market. Now, like here, you may find someone is using support and resistance, but for him, he doesn't have those real signals that helps him to enter in the market. So he's going to stay in the confusion. Can I enter? Let me wait for another candle. Let me do that. That means you are not having a well-refined edge. When the market reaches here, for me, I need the small candle that will come and pick liquidity here. I need the small candle that will come and pick liquidity here. So are you seeing, guys? So that means my stop loss will always going to be down here. That is the stop loss. Because I know this market has picked liquidity here. And I'm expecting this market to continue going where? I'm expecting this market to continue going up. So if it fails and fakes me out and it starts coming down and they break the rows of this candle like here, I'm supposed to be out. That means this is no longer the trade. Are you seeing? So my edge is well refined, is telling me where to enter, because I will enter when they start breaking the highs of this candle. Is telling me where to put a stop loss. Is telling me where I will take profit, because I can take 1 to 2, 1 to 1. I'm going to give you the reasons why, where we are going. So this is the well-refined edge. So you have a well-refined edge. So are you going to make money in the market with well-refined edge? No. Now we are going to go on our second thing when we are building a risk management. And our second thing is what we call, you must risk in dollar values, not in pips. I want you guys to grab this. It is very important. You must risk in dollar values, not in pips. Now, for example, you find someone is having edge now like me. My musmar will always come. I can take a trade when they start breaking the highs of this musmar. But I don't know how long will be that musmar. So it means if I'm saying I'm going to risk 5 pips per trade, I'm going to be wrong. I want you to understand this. So I don't know how long will be this musmari. So that means, remember, to succeed in this game, you must risk equal on each trade. People, they always get confused here. I want you to grab this. You must risk equal on each trade. If you are saying that I'm going to risk $100, you must risk $100. Because very many people, they always make a mistake. I heard someone saying that for me, when I'm winning, I increase the lot size. And when I'm losing, I reduce the lot size. Then I ask myself, how do you know that you are going to win? How do you know that you are going to lose? Because remember, to succeed in this business, you are supposed to be having the edge. Hedge not as a signal that helps you to enter in the market. So, and the edge helps you to win more than you will lose. But hedge can tell you when you are going to lose and when you are going to win. Very many people get lost from here. You can't know when you are going to win and when you are going to lose. So tell me, if you are risking $200 on one trade, another trade you are risking $300, another trade you are risking $400, another trade you are risking $50, that means you know what is going to happen next. And the only thing that kills very many traders is to start thinking that you know what is going to happen next. But we pros, because the person who's telling you now I'm managing over $1 million and I'm making money in a consistent way. So the people who are here, I'm creating, people will treat this one as a business to make money in a consistent way. You know, this year will be up, next year will be up, and another year will be up. Not those guys will be in ups and downs. I'm making $10,000. Next time we find him on the street when he's not having 100, even a single coin. So those are gamblers. But for me, I'm trying to create people who will make money on a consistent way. So to make money on a consistent way, you are supposed to risk equal on each trade, because you can't know when you are going to win and when you are going to lose. But at least you know I'm going to win more than I lose after series of trades. So that person who's telling you, I want you, and we have to use common sense in this business. This person who's telling you that when you are losing, reduce the lot size, and when you are losing, when you are winning, increase the lot size. How can you know that you are going to win, and how can you then know that you are going to lose? Because edge can't tell you that. Our edge, no matter what you do, one day you are going to lose a trade, and you can't know when that loss is going to come. You can even win 20 trades in a row, but there is one time you are going to lose. That's why we always say stop loss is the must use if you want to survive in this market for a long period of time. I've seen guys who doesn't use stop loss. They are still coming. They're on the way. I don't know if they will reach, but for us, we arrived because we use a proper risk management. So in a proper risk management, if you say you must be taking trades in the sets of trades, you can say 100, you can say 30, but for me, I'm saying you take trades in the sets of 20 trades. Now, like in my age, the age that I have shown you, I know I win more than I lose, but I can't know when the win is going to come. I can't know when the lose is going to come. When the win is going to come. That means I must risk equal on each trade, and I always risk 1% on each trade. Let's say, example, I'm risking 1 to 1. That means by the time I complete my 20 trades, because my edge win is more than I lose, I'm going to be having 15%. Minus that 5% I'm going to lose, I remain with the 10%. That's how we made money in this market. So you must risk equal in each trade, and you must risk in dollar values, not in pips. I'm going to show you directly on how you can do that on charts. So like the way I showed you, this is my edge here. This is my edge. The reason I'm saying this was my edge, it came and picked liquidity here. And this is the area of benefit. This is the area of benefit. Area of benefit. So this was my edge. And I don't know the amount, how long this musmar will be. I can't know, because the market will always print different nails. But for me, when I get this nail that peak liquidity, I'm going to take this trade. But I know I will take this trade risking $100 per trade until I complete my sets of 20 trades, not pips. So I'm going to show you how you can calculate this and you get the answer. So for example, we can see how long is this musmari. So this musmari is telling us that is in 45 pips, and I'm going to say, for example, I'm going to risk 1 to 1, but my smart is telling me it is in 45 pips, and I want to risk $100 on each trade. Are you getting it, guys? I'm going to risk $100 on each trade, and my musmari, I'm going to risk 1 to 1, and my musmari is telling me it is in 45 pips. So if I'm going to risk $100, that means we have to go on a calculator and we calculate and we see which lot size am I going to use so that I can lose $100, because we must risk equal on each trade. The reason I've told you why: you can't know when the win is going to come, you can't know when the loss is going to come. So if you are risking $200, $300, $400 on each trade, that means you are gambling. You will never make money in a consistent way. So now my setup is telling me is having 45 pips, and I'm going to risk $100 on each trade. So I will get $100. I divide it by 45 pips. I divide it by 45 pips. So that means I'm going to use 2.2 lot size. Are you seeing it, guys? So if I lose 2.2 lot size, I'm going to lose $100 on that trade. Are you grabbing it, guys? So now I'm going to go in my MT5 and I put 0.22, like the way they were telling us on a calculator. So by the time this trade is going to hit a stop loss, I'm going to lose $100. So it is the same thing that you are going to continue doing on each trade. You risk $100 per trade again and again and again until you complete your sets of 20 trades. And if you keep doing the same risk on each trade, by the time you complete your sets of 20 trades, because you have age and you back tested it, I'm telling you, after 20 trades, you are going to be coming out as a winner. That's how we make a consistent income in this business. So now let's take another example. Let's say that we got another Msumari. And another Msumari also had a different pips, but you can still use the same calculation again and again. Let me show you on charts and we see. So according to our age, we can still also take this trade because it is also formed the same thing that has formed here. This Msumari, we can still take this Msumari because it picked liquidity here. This is the area of benefit. So we are going also, if we have got this Msumari, the other Msumari told us to use 0.22 lot size. Because remember, standard lot, when you start with 1, you are using a standard lot, but here we are measuring in a lot size, because each lot size you are going to be risking losing $1. So let us assume that we got another Msumari. Let us assume that we got another Msumari here, and we are going to risk 1-to-1. So stop loss will be there, and another stop take profit will be 1-to-1. So, and this Msumari is telling us is having 37 pips, and I want to lose $100 because remember, it is our goal. We are supposed to risk equal on each trade. So I'm going to go on a calculator and I use the same calculations. I want you guys to grab this because it is very important. So I will get $100. I divide it by 37 pips. I divide it by 37. It is going to give me the lot size which is 2.7. So I'm going to go in my MT5 and I put 2.7. It is the same thing we are going to continue doing, getting the same calculation. Don't risk in pips, you must risk in dollar values. That thing is important. It is very important. If you can't grab this, then your risk management is going to shake you and you are going to remain in that cycle, which we always call boom and buster cycle. So we are going to our third most important thing in trading, which we call risk to reward ratio. Risk to reward ratio is very important, and I've been hearing a lot of debates, people talking about this. Simani 1-to-1 is important. Simani 1-to-2 is important. Simani, if you can't risk 1-to-10, it is very important. And I also like it because I remember when I started trading, we had our norm. We used to say that sit like a bird and eat like an elephant. But there is what we call a cost that you pay if you want to sit like a bird and you eat like an elephant. there is a cost that you are going to pay. You are going to lose statistically. The higher the risk to reward ratio, the more trades you are going to lose. The lower the risk reward ratio, the more trades you are going to win. But the question is someone who's risking more than 1 to 2 going, is someone who's risking 1 to 1 is going to make money? Yes, is going to make money. Is someone risking 1 to 10 going to make money? Yes, is going to make money. But I'm going to give you the psychology behind it, because for me, it's made me to stay in that cycle, which we call boom and buster cycle, until I realized it. Remember, every mistake a trader that makes it is the results of losses. You all know it, guys. The more you lose, the more your mental health is going to be disorganized. The more you lose, the more your mental health is going to be disorganized. So in everything we are doing, like someone who has never made money in the market, we are supposed to fight to limit the losses. And the way you are going to limit the losses is you are going to risk 1 to 1 when you are beginning. So in the beginning, we are not all about making a lot of money. We are about to instill self-trust in our mind. Tell our mind that for sure I can make money in this market. I remember by the time when I passed my first challenge, I made $100 on my Forex fund, and they used to take 1 month to pay us. But for me, I said, okay, in the country I'm in, it is hard to make $100 within a month, because there are people who are working for $50 for the whole month. I said, let me wait, and I also eat on that money that made me spend sleepless nights, that made me to read 1,000 books, and I also eat it and I feel it. So I waited for the 1 month, and I made withdraw. I got that $100. I bought a shirt and I put that shirt. I said, this shirt is from trading. So I was telling my mind that I'm also capable of making money in this market. So I'm going to show you this thing practically. You know, when we do those things practically, we can grasp it and we understand it. You guys, I want you to make money on a consistent way. We are not here to joke. We said we came in this industry to do what we call cleansing. So according to my age, by the way, if you have not watched the video about my age, you go and watch a video about my age. The link will be in the description. So according to my age, we said we mark on the body. So that means here we got 2 setups. And when we got 2 setups, let me say that Mr. Son of Sam is going to risk, for him is risking 1 to 1. And Mr. Burton Marik, for him is risking 1 to 4. He's sitting like a bird and he wants to eat like an elephant. Okay? So let's go in that thing and we see. Son of Sam is risking a cow to get a cow. Mr. Burton is risking a rabbit to get a cow. But there is a cost. It is what we are going to see now. Practically, we said we came in this industry to do what we call cleansing. So Son of Sam, for him, he doesn't have a lot of energy. He's tired of losing many trades in a row. For him, he's going to risk 1. On that first musmar here, I want you to grab this because it is important. On this musmar first here, this musmar, Son of Sam, for him is risking, Son of Sam for him is risking 1 to 1. Mr. Burton, on the same musmari, is we are using the same strategy. For him, is going to risk 1 to 4. I want you to grab this. For him, is going to risk, Mr. Burton, for him, is going to risk, let us put Mr. Burton here on this line. For him, is going to risk 1 to 4. 1 to 4. So that means, according to this Musumar, the first Musumar, this one, Mr. Bolton lost the trade because for him he was sitting like a bird and he wants to eat like an elephant. But son of Sam, for him we risked 1-1, he won this trade. So it is tick for Mr. Son of Sam, it is X for Mr. Bolton. So the same thing, we are going to go on the second case, on the second trade, on the same area, because remember this one, it is also our what? Our Musumari. I want you guys to grasp this. It is important. I want you to understand and you see, you know the costs that we are going to be paying. So now we are going on our second case scenario. Let's say I'm risking 1-1 and Mr. Bolton is risking also, and Mr. Bolton is also risking 1 to do what? And Mr. Bolton is also risking 1 to 4. And Mr. Bolton is also risking 1 to what? To 4. I think it is in this area. Okay. And Mr. Bolton is risking 1 to 4. Let us separate this one. So for me here, I'm going to win the second trade, and Mr. Bolton is going to win his first trade. But Mr. Bolton here is going to make money more than me, because for him, he's going to get his cow when he has risked 1 rabbit, 2 rabbits to get a cow. But for me, I've risked 2 cows, and I also have 2 cows. So that means it is a win-win situation. But what I'm trying to say, psychologically, when I was entering this second trade, and Mr. Bolton, when he was entering this trade, you never know if he have even reached on the level of entering that trade. You may find he was not even using a stop loss at first price. He's not going to be having a chance of entering this trade. But let's say that he lost this trade and he came in this trade. Psychologically and mentally, me, I will be psychologically okay and mentally okay. Because for me, my risk to reward ratio is limiting my losses. But for him, his risk reward ratio is also going to make the money, but for him is going to lose many trades more than me. Me, I'm going to win many trades and I limit the losses. And remember, when you're a beginner, it is what I want you to do. I want you to limit the losses so that you can stay in a mental state where you will be in the state of tranquility, peace and harmony, when you will not get something that will shake you, because those losses that are going to come, they are going to find you at least when you are in profit. They are not going to shake you like that someone who is sitting like a bird and eating like an elephant. There was one of the greatest traders called Richard Dennis in 1980s. He used to trade people's money, and they used to invest, and of course they used to see the portfolio of that man. And that guy could lose 95 trades and he win only 5 trades. But those 5 trades that he could win were monsters. But do you know what people did? When he was losing, he lost all the money and he reached in 30%, and people started crying. If you had invested 1 million, you had only 30,000. People, they started crying, you man, you want to kill us. At least give me my 30,000 and I go and I eat that. Then the man said, wait, we are about. And people, they disturbed him. They gave up on him. They took their money. I remember he's one of the best quotes. He said, if you tell me to trade people's money, even if you tell me that it will be true of cancer, I can't trade them. But what am I trying to say? Psychologically and mentally, those people were not patient enough to wait for Richard Dennis. Maybe the second trade was going to recover all their money, but they were not mentally stable to wait for that guy to hit his trade that is going to recover all the money. So I think the debate, we are ending it today. No matter which risk reward ratio you are using, it is well okay. But remember, you pay for what you want. The more you increase the risk reward ratio, the more you are going to lose. The more you reduce the risk reward ratio, the more you are going to win, and you'll be in the mental state will be allowing you to trade in the state of tranquility. So guys, I think when we are coming to the conclusion, I want you to understand, we said to be having a proper risk management is going to be built off three major things. We said the first one was the edge. Edge, we said the edge must be telling you where to put a stop loss. Edge must be telling you where to take a profit. We said another thing, we must be risking in dollar values, not pips, because when you risk in pips, you don't know how your edge is going to print. For example, my musumari will always be having a different sizes, so that means the one can be in 45, can be what. So we went in a calculation and I told you how you can get a road size that you can use on each musumari you are going to take. So that means you are going to risk equal on each trade. And we said the reason why you are going to risk equal on each trade, we said we were having edge helps us to win in the market, but I can't tell you when the win is going to come and when the loss is going to come. That means you are supposed to risk equal on each trade, because you can't know when the winner is going to come, you can't know when the loss is going to come. But you know, if I execute my trade following all my plans, my good risk management, risking equal on each trade, after 20 trades, I'm going to come out of a winner, because I know I win more than I lose. For example, my edge, out of 20, I can lose 3, 4, 5. That means, but if I'm risking 1-to-1 and I win, I complete my 15 trades following my plan, I'm going to be having 15% minus 5% that I'm going to lose, I remain with 10%. That's how we make a consistent income. Then we went on to say that risk to reward ratio. There is a debate saying if you win, if you use a bigger risk reward ratio, you are going to make money. If you use the little, you are not going to make money. But we talked about disadvantages and advantages of risk to reward ratio. So we told you to be in mental RSA. If you have not yet made money in the market in a consistent way, you are supposed to use a risk reward of 1-to-1. If you master this market and you buy a share like me on my first payout, you can keep increasing your risk to reward ratio, your risk to reward ratio, until you start making a huge amount of money. But before that, first risk 1-to-1, so that you can also tell your mind. Remember, this is a psychological game. You will be telling your mind, you will be hearing your mind, telling your mind that yes, I can also extract money in the market and I withdraw it. Are you seeing it, guys? It is what we are trying to do. So that is how we are going to build our risk management. There are very many types of risk management, but I'm telling you, if you are still a beginner, use what we call mechanical risk. You can each trade, wait for your edge to form, know where to put a stop loss, know where to take profit. Because I always hear very many people asking me, what was your biggest win in the market? For me, I can't tell you my biggest win or my biggest loss, because I know I take 2 trades a day. On each day, I take 2 trades. And if I'm risking, for example, 1% on each trade, if I lose 2 trades, that means I'm going to lose 2%. And if I'm risking 1-to-1, the best day, I'm going to make 2%. So for me, I don't have a best day, I don't have a bad day. But I know I'm making money in a consistent way, because I know after series of trades, I'm going to come out as a winner, because I know my edge wins more than I lose. So make sure, don't forget to join our Telegram group. We are going to be having free classes. Guys, like, subscribe, share, so that our channel can grow and help thousands and thousands of traders.